Good morning, everyone. Welcome to Admiral Markets webinar. My name is Chris. Today's focus is on strategy, as always, on Wednesday. We're going to take a look at the daily and weekly charts that we already discussed last week and continue with that. We were looking at basically candlestick patterns, candles on daily, weekly charts, and looking at to trade pullbacks. Now we'll be taking a look at breakouts as well. Before we do that, though, be aware that this webinar is shown to a global audience, but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more information and to find out if it is suitable for you. Also, please note that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar, I should say, is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Alrighty, so a quick introduction. You can use the chat, of course. Feel free to use the chat to reach out to me and ask any questions here in the live webinar. If by any chance you are looking at the recording on YouTube, then the best could be to take a look at our details here. 1 second. There you go. You should be able to see it now. So you can reach out through one of these channels. All right, and you can ask a question and we'll get back to you. All right, regarding just a quick note on 1 second, folks. There we go, Admiral Markets. Admiralmarkets.com, you can find out a lot of info regarding what's going on, regarding analytics, for instance, fundamental technical wave analysis, but also you can see at the top more information about the German elections and how that could impact the markets. That's something that Dennet and I will also discuss on Friday. And Friday's webinar you can find by going to Education, Forex, and CFD webinars, as you probably already know because you're here live. But Friday and Monday we'll be discussing that pre and post the event, the elections, and besides that, you can find out just by the main tab.com here about the Masters of Traders. There's 3 webinars there, series of 3 webinars coming up. Definitely check that out. MT5, cryptocurrencies, all info is there. But more importantly, I think is just to discover Admiral Markets, discover these tabs, discover how you can set up an account, demo, to try out some strategies at first. For instance, you can see here what kind of instruments are tradable, etc. All right, so with that said, we can take a look at the charts. All right, and last week we were discussing candlestick patterns. I'm not saying that technical indicators are not valuable on daily and weekly chart. It's just that I think that candles and candlestick patterns, basically patterns in general, already give a lot of info without necessarily adding any indicators. I have a few on the chart. They are the oscillator for divergence, for momentum, for direction too. I have the moving average also for direction, trend purposes. I have Admiral Markets pivot points weekly. I have the Keltner, and I added a parabolic. Right, that's not what I normally have on my chart, but just for this purpose, I added a parabolic. Now, just a couple of indicators here to give some context and reference points, basically, right? Just to give a bit more understanding of the chart. But is it necessary? Is it necessary? Not really, I think. I think if you get to a level of understanding patterns and candles, it's not a must. But it does take some time before you get, a feeling for those patterns, feeling to read those candles, and that just takes a bit of practice and experience. And there's no shortcut for that. That's just practicing on taking trades with small risk, taking trades on demo accounts, going back in paper trading, back testing, etc. But this webinar is here to make that path a little bit smoother by kind of giving the ideas that I think are most important. So you maybe find a shortcut, right? A little bit at least. So last week we were talking about strong candles, good candle closes, and basically understanding the overall market structure, right? So, for instance, last week we would be looking at this. This is a prime example, very good example, right, on the pound dollar, for instance. Oh, somehow my screen is frozen. Sorry about that. So here you can see a pound dollar weekly candle, right? And that's a great example of a good strong candle. So there are a couple of things we can look at for a weekly candle like this. A retracement to a 23.6 fib or a 38 or a 50 fib. That's typically the retracement zone that you will get with a strong candle like this. Why is it a strong candle? Look at the candle size. I'm talking about, once again, this specific most recent candle, in fact, right here. I'll put a green circle around it so you can see it clearly. So good candle close, near the high, good candle size in relative to the candles before that. So those are the two most important things. Thirdly, price is breaking above the Keltner band, indicating break above resistance. So typically the low of last week should not get broken. That is the invalidation spot of this bullish candle. And as I said, price should respect 23.6 to the 50 fib zone, roughly. Now, trading like that is possible, but it requires quite a large stop loss, because if you take an entry even at the 50 fib and put a stop loss below the candle low, we are looking at a stop loss of about 240, 50 pips. So not everyone feels comfortable with that. Not everyone can take a lot size. That might be too much risk. If your account is on the smaller side, then one micro of that could be already a substantial percentage of the account. So that's some disadvantages. So taking a trade like that is more for medium or bigger sized accounts that don't want to be intensively in the market, that want to just look at the charts maybe once in a while, maybe once a day, not even maybe once a day, maybe once a week, but still capitalize on some of these bigger swings. So not everyone like that, but this is one way of trading it though. An entry here, stop loss below it, and targeting, for instance, the minus 61.8 target, right? Another way we talked about last week was a retracement, waiting for daily candles to retrace and reacting to these fibs, right? So yesterday was a bullish candle, so that could be an entry right there, the bullish reaction to this fib zone. All right, the fib zone is once again here, and price did move into that zone. It's above the weekly pivot point, so that could be an entry. With this particular spot, the stop loss, I think, should probably go, well, a risky stop loss would be below yesterday's low, right? That's a bit riskier because yesterday's candle was not that great. A more conservative stop loss would go below this strong daily candle and go below the 50 fib, maybe below 133.50, somewhere around here, right? So stop loss, if you use the wider stop loss, is still pretty big upon the entry of this, upon the close of this daily candle, and it's probably still around 150 pips. The tighter one would be probably, let's see, about 50 pips. So that depends on your risk appetite and how a trader sees the overall picture. It's something that can be decided from case to case. In this case, I don't think putting the stop loss below this low is that bad. I think it's pretty okay. The target, if you're of course using a daily chart, might be better to aim for the minus 272 target and the R1 at 137.50 rather than a minus 61.8 target. So that would give about 250 to 40 pips target and a 50 risk. That's great. That's a 5-to-1 reward to risk just based on this daily chart, right? The other option, and this is all from last week still, just to give you an example of what I was talking about. And if you didn't see last week, the recording is available on YouTube. The other thing I wanted to talk about today is breakouts. Is it possible to trade breakouts on such high time frames? You might be wondering. And I think it is. You got to pick your spots carefully. But yes, generally, I think it's possible. I don't know why I have blue lines here, but let me get rid of them. Doesn't make much sense. Oh, it's purple, sorry. So the angle was a bit, made it look blue. But so anyhow, so in this case, what would be a breakout? Well, basically, the breakout that I would be, in this case, considering is a break above yesterday's high, right? So pending order there with a stop loss below yesterday's low and the target still at the same spot. All right. So that could be a breakout. Now, this particular reward to risk ratio is not as interesting, right, as the 5-to-1 I just mentioned upon the candle close of the pound dollar daily chart. But it's still decent, right? Because the entry would be yesterday's high is 135.50, so maybe 135.60. The stop loss would be, once again, let me pull that up. 1 second. Let me double check what the level is exactly. Somehow it's not showing, but anyhow, it should be around 134.60. So it's about 100 pips. Oh, there we go. Yeah, 134.60. So it's about 100 pips. The target, once again, 137.50. So I would go 137.35 perhaps, which gives 175 pips. So it's still close to a 2-to-1. It's actually 175 if I did my math correctly. Reward 100 risk. So it's pretty simple. It's a 1.75 reward to risk ratio, R2R, instead of a 5-to-1. So it's a substantial difference. Why would that still make sense? Because it's above 1-to-1. Second of all, it did break above yesterday's high. So that kind of confirms the fact that we get a continuation, right? So if it breaks above yesterday's high, there's a good chance of a continuation. That's the whole point. Whereas now, this kind of candle is small, pretty indecisive, relatively. If it breaks above yesterday's high, there's a higher chance the price will make that upside. Now, slightly less. So yes, you get a worse R2R ratio, but I think better odds of that trade working out. So it's this trade-off always, right? So is it always that simple as taking a candle high and putting the stop loss below the candle low? No. Don't get me wrong, it's not what I'm hinting at. It's just that this specific situation on the pound dollar right now, right here, is, I think, set up properly for continuation. That has a large fact to do with last week's candle. Just based on that, I think gives a lot of info because it's a strong candle. Not every week are we going to have such a strong candle to our disposal, right? Many candles are not like that. That's just how it goes. And then in any case, it's always important to look at the overall context, look at the overall structure of the market, and understand what's going on. For instance, with the pound, we had a break of this resistance trend line. That's important information too, right? We had this support trend line. A bounce off that trend line is important information. So it's important to take a look always at these three factors: support and resistance, trend and momentum, and patterns to get the overall kind of context. That's always important, and to make sure that it's an interesting pair to look at and trade. Will the pound continue higher? Who knows? But ever since the beginning of this week, ever since the weekend, that has been my kind of perspective, my view, my bias, and everyone needs a bias. Otherwise, you're not going to hang on to the trade, or you're not going to even, if you're always neutral, then you're not going to have the persistence maybe. But the bias has to be based on tangible things, right? Because as beginners, our bias is often misdirected by emotions because we're looking at the charts and the charts kind of create emotions in us. Once you get more experience, then you base your bias on what you see on the charts. The next step is then to kind of be honest to ourselves and use the information that is being sent to us and analyze that in the most neutral way possible, because then we need a bias to trade, but when the trade develops, then the bias kind of colors our glasses pink, and we don't see what's really going on. We kind of root for our side, we root for our trade, and what we should be doing is trying to treat the information and to see if indeed our analysis is our trade is going as per analysis. So when we're in the trade, we have to be careful and be realistic, and therefore it's good to use invalidation and confirmation levels. It's like a reality check in a way. So um, so besides basically candles and candlestick patterns, you can use these tools. Just a quick note on these tools to gain a perspective about what's going on. I'll use some trend lines. The oscillator is showing blue bars above the zero line. That confirms the upside momentum. We see price above the Keltner strongly. That confirms it as well. So this is all kind of confirmation. Not more than that at the moment. Can you use other indicators for breakouts, for instance? Yes, that's why I added a parabolic. It's not something I use myself, but just to give you, I want to, widen the experience, let's say, beyond what I usually do. And parabolic is something that breakout traders, I think, use. And if you find a good spot, I think it could make sense. Once again, I don't use parabolic, but it's something that could be worthwhile to think about and test. Just to give you a different perspective. Um, as for instance, just to give you an example, right? How it could work. A bounce off the here we see price approaching a weekly trend line. Will it bounce or not? Well, we can wait for candlestick patterns like this, right? That's one way. Or we can wait for price to break above the parabolic as it does here, or touch the parabolic like it does there. So that could be an entry with a stop loss here. And targets, well, you name it. Fib targets, previous top, etc. So there are different ways of trading breakouts, not only yesterday's high. You don't have to wait for the high. ZT is asking, does it include the wick? Technically, yes. If you're looking at the high, you're looking at the wick, indeed. The top of the wick and the low of the wick for a low. Yes, but you don't have to necessarily, well, I would say traditionally the high is, the most used. You could use candle closes too, by the way. But I think I'm not sure if that makes sense in this context here, but it's possible. For instance, we see yesterday's candle close was above the candle close of the day before that. For instance, right? So something you could think about testing. This is not something that I have tested myself or used myself, but is something that is possible to think about, right? Or if you zoom in, now of course I wanted to stick to daily and weekly time frames, but let's say you have some spare time and you have the option of monitoring the 4-hour chart. You could take a look at candle closes. From that perspective, for instance, well, here in this case, the candle close and candle high are pretty much the same. But here we see candle closes like this, right? So a close above that level could indicate a breakout continuation, for instance. So you could use candle closes also in various ways to measure breakouts too, I think, yes. You can see also, let me say it this way, you can see key levels from those closes. And ZT is also asking, so for outside day bars, it's to consider pullbacks continuation of the trend. outside day bars. I'm not sure if I follow the question. Let's see. Get the pullback. If I understand it correctly, yes. The yeah the pullback and continuation. Sorry, the trend and to consider pullback and continuation with the trend is always important indeed. Correct. You could trade indeed pullback or the breakout. So, for instance, let's see. Let's see if there's an example. This is well. I'm not sure which. This is, of course, this is. Let's see. Outside candle. I'm just trying to. I'm not a big. I don't know the names of these patterns sometimes that well. Is it? Are you referring to this 4-hour bearish candle or the bullish candle? Okay, if you're referring to this bearish candle, then I would not personally see that as a bearish reversal pattern. Some might see that because it's a bearish candle, but I'm looking at the weekly candle and the strong daily candle still. So, and seeing that there's a potential for continuation, and seeing this bearish candle as kind of a retracement. Alrighty, let's take a look at some other pairs. I am in the long of the pound myself, by the way. So let's see how that goes with pretty much the same parameters. So I have my fingers crossed. Let's see. Uh, Yesterday's candle I think is okay. So let's see how today's candle will shape out or look like at the end of the day. But I think, considering the overall structure, I think upside looks pretty good so far. All right. Sorry if this, folks. There's a bit of a delay with my charts here. All right. Sorry about that. I need to probably close it quickly. Do you have any currency pairs in mind that you would like to take a look at in the meantime? All right, just waiting still a bit. In the meantime, let me know if you have any particular currency pairs in mind. Basically, I mean, using strong candles, I think, is always a good method for understanding some potential setups on higher time frames quickly, right? Saves time and kind of can focus pretty much on those candles quickly. If you have more time, if that's what you're after, if you're looking for time saver, if you're looking to analyze the markets within 15 to 30 minutes per weekend, right, then that could be a good way to do that. If you have more time, then sure, of course, the more analysis, the more trading opportunities you might be able to see. Of course, if you have the experience to understand that, it takes a bit more time, but eventually it's worth the effort to understand the charts a bit better. But it all depends on your time balance as well. All right, I got my charts back up. Let me let me share the screen here. One second. All right, there we go. So let's take a look at some others. Maybe the euro dollar, for instance. We can see that price is in a range, right? So it didn't look that interesting to me from the euro dollar perspective. Last week had a wick, so might consider upside continuation. Definitely trend is up. So anyone who took this particular bullish candle, that made sense, right? Good bullish reaction from the support zone. But now I don't think it makes much sense to look for any trade. Maybe even a rejection bar here, for instance, for a move one more time down. But if there's a strong bullish candle breaking above the R1 and the Keltner, that could be a good breakout candle too. So I think that this is a decision zone. Let's see what kind of candles, daily candles appear here. That's what I would think for the euro dollar. Now regarding the dollar yen, I think that yesterday you can see clearly a doji, right? So indecision, a basically a bearish move might start if yesterday's low get broken. So more aggressive move could be to put a entry order there and anticipate a correction down to the S1, for instance, which could be a level of a head and shoulders, right? Like this, inverted head and shoulders. So that would be a more aggressive entry because basically price is in a bullish momentum. So by trading the break of the low, we're anticipating the end of that momentum and a start of a bearish swing, and that's a bit risky, but is a way to trade a reversal as well. If there would be a strong bearish pin bar in this zone, it could be a different story. It could be worth trading the retracement of this candle, for instance. But yesterday was a doji, therefore not really a strong reversal signal, indecision candle. So trading, retracement of yesterday's candle doesn't make sense in my view. A confirmation could be a break of the low. If you have more time to look at lower time frames, then you can wait for the break of the low, look how the break looks like on lower time frames, and try to trade it on an hourly chart. Try to trade a hour bear flag or 4 hour candlestick pattern, right? If you don't have the time to monitor that, then the alternative would be a pending order upon the break. Now, the disadvantage of that advantage is that you can do it even if you have no time to monitor the charts. The disadvantage is, of course, is that we don't know how prices are going to look like on lower time frames. How is it going to develop? And if you keep an eye on that, you have a bit more feeling for if the trade is going to work out or not, if you do it properly. Of course, if you have less experience, that might get you into trouble too. So, there are pros and cons of each way. This is a reversal setup. It's always riskier though. All right, so that's something to think about with regard to the dollar yen. Um, I think eventually more upside is possible up to the resistance level, the pink level, the purple level that I just added, as you can see. And that could be then the main target of the head and shoulders within this range. All right, let's move on. Sorry, I'm struggling. I might have to reinstall my platform because it's not acting as it did 2 weeks ago when I had my last webinars with Admiral. No, yeah, 2 weeks ago with Admiral Markets. I don't know why. Uh, Maybe I have too many tools on it. But anyhow, I will reboot that for next week webinar. All right. Now, next one. Aussie, for instance, right? Aussie could be an interesting one. I actually pulled away already. Uh, and this was on my list as well. Basically, support trend line, right? Strong bullish candle after that. So showing a bullish reaction. So what could be a trade? Well, it could be a retracement of that candle or a break of that high, for instance. That could be definitely one way of trading the breakout of this Aussie and a continuation. Target stop loss would be below the candle low, and target R2, R3 could be levels to think about, right? Or even further, perhaps. If we use a fib, for instance, might be considering something else. Might consider, for instance, this minus 272 target, just a bit above R3. All right, so that one is passed, but if you're still monitoring the charts, we can still look for maybe it just happened actually this breakout. We can take a look and try to trade continuation. For instance, we can see that local resistance is pretty close by, right? There's a R1 close by. Now this is a strong candle, so if it closes like this, it will probably still continue a bit. But the R1 could be a zone that might create some flag, and then the break of the flag could be something to trade, right? So that could be trading continuation on lower time frames. To give you an example of yesterday's candle, for instance, yesterday's candle was a pretty good candle too because it didn't break these wicks, but it did break above all the candle closes. Take a look at that. You see here, those are two candle closes right there. And let's see if there are more candle closes here in this zone. So with that candle, really, it busted through all of those, in fact, in a way. So that could have been a candle to think about too, from a certain angle, right? It didn't break above these wicks yet, but the break was probably coming, considering the bullish momentum that we saw and the channel that we saw as well. All right, that was an example of yesterday or beginning of today. Let's take a look at some other pound yen, for instance. Very strong weekly candle, and you can see that basically, yeah, this is a candle that leaves no doubt, right? You can see pretty strong candle, pretty sizable candle. So same like the pound dollar, looking for basically a retracement on the daily chart to see a continuation. Preferably a retracement to the 23.6 fib. That hasn't happened yet. Prices are going sideways like this. So it would be nice if it made a little bit of a dip. Look for candlestick pattern on the daily chart and look for continuation. If it doesn't, right, then it could just be immediate follow through. In that case, I would probably need to see a bullish candle that I probably need to see a bullish candle like this, and then I would just look for a retracement of that candle and try to trade a continuation. All right, so it's either a break and then trade the pullback, or it's the pullback and trade the bounce. But strong weekly candle, definitely. That's an interesting one. All right. On New Zealand, for instance, we've looked at trend continuations, but sometimes, of course, price is in a range, price is reversing. So when it's reversing, breakouts are slightly riskier, I think, if it's in a range as well. But then in that case, I think candlestick patterns are slightly better. Now, in this case, we had two bearish candles in a row. So I think that the likelihood of a reversal is increasing on the odd New Zealand. And we see overall that price is in a range as well. So from this perspective, right, it's not too strange for price to be basically making ups and downs like this, right? So last week's bearish candle, I think, is a pretty serious bearish signal because it's not really an uptrend, it's in a range. So last week we had a good, downside potential. I think we could put a fib, for instance. Step one could be putting a fib on last week's candle, like this, and waiting for price to get to our fib zone, 38.50, preferably maybe 23.6 fib. Price actually just hit the 23.6 fib. Very shallow retracement, in fact, and seeing a couple of bearish candles in a row now at this moment. So could it be traded? Well, it could have been maybe traded. I mean, it is a bearish candle. It has a higher high. It has a lower low. So is it a great signal? I don't know. But maybe more risk takers could have looked for an entry about halfway. Put a fib on this candle. Look for an entry halfway, right? And target minus 272 target, which has already been hit, and a minus 61.8. All right, your odd, for instance, is in a range as an example of price going sideways, and sometimes there's nothing there. Two dojis in a row does not really look like something that is interesting with such an indecision, right? So there's nothing wrong with skipping a pair like that right away, just looking at this chart and saying, okay, that's it. I'm not interested in any retracements, in any breaks. Um, Forget it, right? Now, tip, there is a potential for trading the break of last week's high. There's two indecisions. There is some bullish momentum. So you can always find something, but be critical and always ask yourself, is it something that I really want to trade? Is there some other pair that might be more interesting? And the euro, I don't think, is one of those. All right, so that was a quick look at some of the majors. Do you have any questions at this point? All right, so step one is always take a look at the structure, take a look at support and resistance, whether a price is trending, is there momentum, uh, analyze patterns, get the overall feeling, is it an interesting pair or not, right? Step one, understand whether you want to trade that, yes or no. Step two is then, is there something, is there a decision zone that is tradable close by? How do you want to trade it? In which direction? And third of all, is there a candlestick or candlestick pattern that in the decision zone that is interesting? So once you have those three things checked, analysis, right? Support resistance trend patterns, decision zone, what and how, what is interesting. Third, what kind of candlesticks do we see in that decision zone? Um, then that of course we can find entries and stop losses and targets. That's the fourth step. So, for instance, the pound dollar, as we go back to the first pair we looked at, right? Basically, the decision zone, right? Our analysis, bullish trend, right? For instance, right? Because we can connect these lows and we see clearly higher highs, higher lows, right? So that's step one. So uptrend, yes. Bullish momentum, yes. Patterns, we see a channel, could be a slight rising wedge, but it looks more like a channel. Very quickly, right? So that's it. For this example. It's two, look for decision zones. So basically the Keltner, right, and the previous high here, decision zones, right? Or here at the bottom, right, decision zone, decision zone. So, and then the third step, candlestick reaction, strong candle breaking through it, right? So now you see those three steps and how they play out with the pound dollar. All right, folks. Well, then of course, and then the last step, step four, of course, then find the entry. So that could be a retracement of the weekly candle. It could be zooming into the daily chart and looking for a retracement to a fib and looking for a candlestick pattern at the fib. It could be trading the continuation, the candle break of the candle high or the candle close. So it could be a pending order upon the retracement, a pending order upon the break, or it could be a candlestick pattern and a market order, right? Or it could be even zooming in further to lower time frames and trading breaks and patterns on those. Right? So those are the four steps. Breakouts don't have to be candle highs or lows. Once again, they could be different things. They could be Keltner bands, they could be parabolics, etc. There are a lot of tools you can use for breakouts. I just mentioned a few, but there's a wide choice basically. All right, so that wraps up for today. Once again, evermarkets.com. I'll show you the website. Last time my screen was frozen, so you didn't see it. But basically, evermarkets.com. Here you can check it out. You can check out basically the webinars we discussed right here. Cryptocurrencies, of course, too. Yes, Admiral Market MT5 too. But also the three webinars, Masters of Trading. Check that out here. Book your seat by clicking on the green button. More webinars as well in educational section, Forex and CFD webinars, analytics, as I said, fundamental technical wave analysis, plus much more. And of course, it's always good to understand how you can start trading, demo, live account, and what you can trade. So check out the website with all the details there. Sorry for that technical problems as well. I'll try to sort that out for next time. And in the meantime, wish you all great trading. Cheers.